Hello, and welcome to the final session of our class 6, IRS Penalties and Interest. I added this a few semesters ago because I just feel it's very important to have a good understanding of this. And I am going to, I'll have it up on my webpage. I apologize for not getting into the class, but with all the other material and things going on, I just wasn't able to do it. But I think it's very important, so I wanted to get this to you. Okay, let me get this slideshow going. Okay. Okay, so this is an IRS notice from it's several years ago, but gives you an idea. We got a notice, a bill for $375,000 that I got abated. I got it all abated. And it wasn't like I knew something secret that I was able to, pull the wool over the IRS agent's eyes or something. IRS made a mistake up to the tune of $370,000, and I have had bigger ones than this. Okay, Michigan at one point was billing me $600,000, over $600,000, and it took quite a while to get it straightened out. So the IRS does make mistakes, and you do have to prove it to them. You have to show them that they've made a mistake, but once they do, they correct this. So this one for $375,000, I got abated. Okay, now you really need to be careful of what you're listening to out there. This is, I'm on Facebook, probably a couple other things I don't even know about, but Facebook, and I'm in several tax groups in there, and I get emails, just being a CPA and in the tax business, I get all kinds of emails and things on Facebook telling me that, if you look at this one, how to write off almost anything. I think she's a CPA. Not to pick on her in particular. This is another one. But you really have to be careful of some of these, a lot of them. Often the headline on Facebook that I get is, I recently sat down with my client and was able to save them $40,000 in taxes. Now hold on a second, okay? Okay. And that was what it read. I sat down with a client and saved them $40,000 in taxes. Now, just to give you an idea of how ridiculous that is, if I can get this thing to work, there you go. Okay, say they're in 25% tax bracket, just to take one. So you take $40,000 divided by 25, $160,000 of deductions that they're claiming their CPA or their tax professional or whoever else missed. I find that about impossible. This is another one that I just got a few days ago. Okay, 6 best tax write-offs for your small business, and I think probably the headline included that most CPAs missed. This is like day one, okay, when I'm first meeting you, meeting with a client, we're talking about their business, okay, and we've talked about this, the S corp, that if you run a trader business, you want to do business as an S corp as opposed to an LLC because you can control your Social Security taxes, okay. Business mileage. Of course you get business mileage. Who doesn't know that? Home office deduction. Of course you get that. That's 101, maybe not even 101. Cell phone and internet, anything that you use for business. Prepay bills, I don't know exactly what that means. You can't pay your liability insurance for the next 10 years and take a deduction for this year, and I forget what that rule is. This is another one of those things that just never comes up. It may be, I believe the last time I heard about this and anybody talked about it is you could prepay bills for 6 months, I think, but don't go by that. If that question ever comes up, if you want me to look it up, I'd be glad to look it up, find out what it is, but you just never see people doing that. And why would I pay, 10 years worth of bills to get a deduction? I'm paying, let's just say my insurance is $5,000 a year, and I pay $10,000, $50,000 to get a 25% deduction, get a $10,000, tax reduction. It's just, a lot of these things just don't make sense. Retirement plan funding, we talk about that. That is something I push people to do, all my clients to, fund their retirement plan. Okay. But be very wary of these. In fact, this guide might show you an additional $58,000 in direct write-offs without spending a dime. It's just ridiculous. 58,000. Let's just see what that number comes to. Let's clear this thing. 58. 1, 2, 3. oops, divided by, say, 25, 232,000. You're going to tell me that some accountant missed $232,000 of deductions? It's just crazy. Somebody says, so be very careful of this stuff. You may not recognize this guy, even when I tell you his name. You may not know it. He's a gangster from back in the 20s and 30s, I think, back when they had Prohibition. He was into bootlegging. Al Capone, if you've ever heard that name. There's been at least one movie of him. He was pretty notorious in Chicago as a gangster. You Google him, and there's a bio of him. But he was a pretty bad dude. What did he go to jail for? He went to jail for tax evasion. Okay, if you watch that movie, I forget, De Niro's in it, and the guy from Dances with Wolves, I can't think of his name off the top of my head. Sean Connery's in it. Yeah, it was a pretty good movie, but he went to jail for tax evasion for all the crimes he committed, the alleged murders that he committed or was involved with. He went to jail for tax evasion, and quite a few number of other celebrities have had problems gone to jail for. Wesley Snipes, his accountant, I think it was his accountant, told him you don't have to file tax returns. It's unconstitutional. You were never going to win with that, okay? You were never going to win. If you try that argument, don't pay your taxes, you'll be in jail too. So be very careful with that, with that stuff. And that's what this is for. That's why I'm telling I have this section, why I added this section. I want to go over what you can deduct and the penalties for not doing it. Code section 162, trade or business expenses. And what it says here, it is, there shall be allowed, if you read the first paragraph here, I can't, sorry, I clicked wrong. Okay, there shall be allowed as a deduction all the ordinary and necessary expenses paid or incurred during the taxable year in carrying on any trade or business, including, and then it goes on about that. And okay, so ordinary necessary business expenses, what are those? Okay, that's where we do have a bit of a gray area. Let me pause this for a sec. Okay, I'm back. What are ordinary and necessary business deductions? Oh, I don't need AP. Well, this here is an exotic dancer was allowed to claim a deduction for embellishing her figure, okay, because she she was a dancer. The IRS allowed her to deduct that. Now, there was another case just a couple years ago. A CPA tried to deduct his gym membership, and IRS and what he claimed is that he needed the gym because he needed to be healthy and in shape to deal with the rigors and stress of tax season. And the IRS said, no dice. You can't do that. And so they disallowed that. A real good book on the subject is J.K. Lasher's 1001 Deductions and Tax Breaks. And I get this thing every year. It's about $15 on Amazon. And it's a very good book. There's things in there that people ask me questions, and my first response is, man, I have no clue. Can I deduct this? I'm like, man, I have no clue. And inevitably, well, not inevitably, but there's a good chance, or so far there's been a good chance that I find the answer in this book. So this is really an excellent book. Like I said, $15. I don't get any kickback on it at all. I use it. I buy it every year just to help me find, because it's not always easy. Who would think that an exotic dancer would be able to deduct that, right? If you were an agent, wouldn't you say, no, you can't deduct that, but IRS allowed it. The other argument for the CPA, you might say, well, that makes sense. The guy's got to control his blood pressure and his health and, be healthy to do tax season. And I'll tell you what, let me pause this again. Okay, so I just Googled this. Can I deduct gym membership on taxes? Individuals can, okay? Well, you can't deduct gym membership for employees, including yourself, even if you are not considered an employee. If you own and maintain an office gym, then you can deduct these expenses according to TaxBot. I don't know what TaxBot is. But anyway, there are ways to work around things, okay, that you cannot do it personally, but if you maintain a gym in your office, and I don't know all the gray areas out there. So what you have to do in these cases, you have to do your research and see what has been allowed and what has not been allowed. If you're into sports at all, there's always MVP awards for the different sports. And the player who gets the award, usually gets a hefty sum of money, and they get the notoriety. And so back when those first came into being, the MVP awards, the athletes would argue, no, that is not income to me. That is a gift, okay? Just as if your parents give you money, they give you $100,000 to buy your home, that's a gift to you. You do not pay taxes on gifts. And that is what the athletes argued. These are gifts the league is giving me. I didn't do any effort to do this. I played the game, and I got paid for playing the game. Then they gave me this gift out of their gratitude. The IRS said, no way. Your effort during the year, your work during the year is what earns you that MVP award. Therefore, it is income to you. Okay? That's one of the first cases that I remember reading, and that one was interesting, and just seeing the names of some of the athletes that tried to get away from that. So, be careful about it. This is a real good book on it. As I've said, I don't get any kickback on it. But if you have questions coming up, please let me know. Okay. Because if they disallow your deductions, there are penalties, and we're going to talk about some of them, and some of them can be incredibly substantial. IRS penalties, and states have penalties too. Remember that. If you file returns late, you can get penalized. The states will penalize you. Okay, late filing, generally March 15th. This is for an entity, S Corps, LLCs. They're due March 15th. They can be extended to September 15th. $210 per month. The penalty is $210 per month or part of a month per partner or shareholder up to 12 months. And that can, if you have quite a few partners, that number can get pretty big. Failure to furnish information timely. Okay, if you have the partnership and you do not, if you run the partnership and you do not get the K1s out to the investors, schedule K1 with all required information, or providing incorrect information, $280 per K1 to a maximum of $3.392 million. Okay? They're pretty serious about that stuff. If intentional, $500 per partner that didn't get their K1 instead of the 280 with no limit. So I think you can tell by that they're pretty serious about it. Trust fund recovery penalty. Now, what trust fund recovery means is if you are an employer and you're withholding Social Security taxes and you're withholding the income taxes for the states, if you're withholding sales tax, okay, and you don't pay that money, you are in fact their fiduciary. You're collecting their money, and you have to give it to them. If you do not give them their money, that is there are penalties for that. These are for excise, income, Social Security, Medicare taxes. States have it too for their own taxes and for their for sales taxes. Okay, may be imposed on all persons who are responsible for collecting, accounting for, or paying over taxes, includes those who can sign checks. Okay, back when I first got into this business, one of our clients was in Jersey City, and that's exactly what happened. The guy, he was a treasurer, or controller or something for this company in Jersey City, and he had been with another company in Jersey City. The owner was not paying over. I think it was a state case. Okay, this I believe it was the sales taxes he wasn't paying over, and the controller signed the checks. So the state was. What happens? The owner died, and so they came against the controller because he had the power to sign the checks. So that you may think, oh, I have no responsible for this. I'm just a controller. I'm not the owner. They go after the owner. No. They can go after whoever signs the checks, okay? And for those penalties that we talked about. Equal to the amount of tax owed, okay? That's what the penalties can be. Individual penalties, partnership income is passed through to you on to other returns. The income has the same character on the individual return as it has on a partnership return. Errors in income on the partnership return can result in errors on the partner's return. Individual penalties, late filing. If you don't file your return by the due date, including extensions, the penalty is usually 5% of the amount due for each month or part of month your return is late unless you have a reasonable explanation. If you have a reasonable explanation for filing late, include it with your return. The penalty can be as much as 25% of the tax due. Now your personal return is due April 15th. You could be extended to October 15th. Yeah, and you can get an extension, but you have to file the extension of 4868. Some states don't require extensions. The IRS and many other states do, and to me, it's just a way to collect more money, right? If you don't file that extension, bingo, they got you. They're going to hit you with a penalty. That penalty is hard to get abated, um, unless you have a reasonable cause. Reasonable cause can be a very gray area. Okay. Um, Okay, I lost my train of thought there for a second. Now, with the extension, you are supposed, and this is currently how it is, with the extension, you are supposed to estimate your taxes at the year. If you put down 00 and you owe money, they could deny your extension because they don't know what your taxes are. You don't necessarily have to pay your taxes with the extension for the IRS currently. You can pay the taxes late. But they won't penalize you for late filing. Now, New Jersey has changed that. New Jersey, even if you have a valid extension, if you don't have all your taxes paid by 4/15, they will deny the extension, and they're going to penalize you on that. Okay, the IRS currently does not penalize you if you estimate your taxes properly. They don't have to be exact, but if you put down 0 and then you end up paying them $10,000, good chance they're going to deny that extension. The penalty is 15% per month up to a maximum of 75% if the failure to file is fraudulent. If your return is more than 60 days late, the minimum penalty will be $435 or the amount of any tax you owe, whichever is smaller. And that's in addition to the tax. Okay? Individual tax penalties, late payment of tax. If you pay your tax late, the penalty is usually half of 1% of the unpaid amount for each month or part of a month the tax isn't paid. The penalty can be as much as 25% of the unpaid amount. It applies to any unpaid tax on the return. The penalty is in addition to interest charges on late payment. Okay, so in addition to the penalties, they are going to charge you interest, and they have a number of penalties. They can hit you on late filing, late payment, other things, and then they charge you interest on that payment. Now, one thing that's important to remember is that you can get the penalties abated with reasonable cause, gray area. Interest, they will not abate. Okay, going back to this $375,000 I told you about. Can't really see what the interest on that is. It's a little small on the screen, but that interest I did get abated because the taxes were wrong. Okay, the IRS had made mistakes in their preparation of the in their review of the tax return, and I was able to get all the taxes abated. I got the penalties and interest. Everything was abated because it was an IRS mistake. If you owe taxes, you can get the penalties abated. Generally, although once in a while I do see an email, I do see something that says somebody got the interest abated, but I've never seen that in practice. I've seen people write about it. I've never seen that in practice. Okay. Frivolous return. In addition to any other penalties, the law imposes a penalty of $5,000 for filing a frivolous return. A frivolous return is one that doesn't contain information needed to figure the correct tax or shows a substantially incorrect tax because you take a frivolous position or desire to delay or interfere with the tax laws. Now, I've never dealt with this, okay? I would avoid this like the plague. The father, my son played sports, okay, and the father of one of his teammates asked me to, help him out with his tax return one year, and I was like, yeah, sure. So we met. His wife, he was a contractor. His wife had a hair salon business, okay? And, I took one look at last year's return. Now, he has a real nice house, not a huge house, but 3,000 square foot house, beautiful pool in the backyard, everything there. The grill that's built into the, into the deck and all that stuff out there by the pool, and it was really, really a nice home. And his real estate taxes I think were $15,000 or so. Mortgage interest I forget, maybe 20. Let's just say 20, so $35,000 between those two. And so between the two of them, he was showing on last year's return about $50,000 in income, and I said, Jimmy, this is go to jail stuff, $15,000 real estate taxes, $20,000 mortgage interest expense, and you have you're showing $50,000 of income. That's, so you're living on $15,000 a year after that. How are you paying for your car or your food? I was like, this is go to jail stuff. And maybe he didn't expect me to talk to him like that, but I wanted no part of that return. I wasn't going anywhere near that return. And we talked for a while, and he said he'd get everything cleaned up, and I never heard from him again, which is a good thing. I just will not go anywhere near that stuff. No way in the world. And pretty much as an accountant doing this for quite a while, I can tell when stuff is bogus. It just doesn't make sense. The numbers just don't make sense. And believe me, how any accountant, I think pretty much any accountant's going to right off the top of their head say this stuff is garbage. And I don't know who prepared that return for him, but that preparer is putting themselves in a lot of trouble. Some years ago, I picked up a client. He's a guard at one of the state prisons, and I looked at last year's return. And I was like, Victor, this is nonsense. These deductions, and so we cleaned it up. Because he said, gee, I had no idea. There's this preparer that does all the guards' returns, and I was like, I can't believe this. That none of this stuff has gotten audited. But we cleaned up his return, and we file it legitimately. But even as a preparer, no way in the world would I go anywhere near that stuff, because to get $300,000, $500,000 for a return, to put my my neck on the line for somebody, no way. Okay, so that's what a frivolous return would be. Somebody making $35,000 in living expenses between mortgage, interest, real estate taxes, showing $50,000 of income. It's like, no way. So this includes altering or striking out the pre-printed language. If you sign your return under penalties of perjury, okay, if you strike that out, you could be penalized for doing that. So. For a list of positions identifying as frivolous, see Notice 2010-33. Just Google that. You can find it there, okay, if you want to take a look at what the IRS considers frivolous positions. Individual tax penalties, other penalties can be imposed for, among other things, negligence, substantial understatement tax. Now, one of the things is the code section. I forget what code section is. I haven't looked at it in a while, but it's substantial understatement of income. And what the code says, what the law says, is that if you substantially understate your gross income, I think it's 25%. But what the IRS was enforcing it on is net income. So even though the law says gross income, they were enforcing it on net income. And I did not get involved in that. I've just read a couple articles. I don't know. I would think that if you went to court, you would win in court, because the law clearly says gross income, not net income. But I never had reason to pursue that. But be careful with it, because you can get penalized for things like that, for substantial understatement. And even though it says gross, if the net's off by more than 25%, they could hit you with that penalty, and that's another large penalty. Okay, reportable transaction understatements, filing an erroneous refund claim, and fraud. And people will tell you that the statute of limitation is 3 years. It is, except for fraud. There is no statute of limitations on fraud. Okay, they can go back as far as they want. Criminal penalties may be imposed for willful failure to file, tax evasion, making false statements, or identity theft. See publication 17 for details on some of these penalties. Okay. So in addition to the civil penalties, which we've been talking about, you can also be hit with criminal penalties, which is what Al Capone got, which is why he went to jail. Generally, you don't go to jail for civil penalties. Individual penalties, if the tax is understated by 10% or more than $5,000, it's 20% substantial understatement penalty. IRS can audit. Okay, we just talked about this. Up to 3 years after April 15th, or the date is filed. If you file October 15th, 3 years after October 15th. If you file it after October 15th, 3 years from that date. There is no limit on fraudulent returns. There is no statute of limitations on fraudulent returns. Interest. IRS will charge you interest on taxes not paid by the due date, even if an extension of time to file is granted. Also will charge you interest on penalties imposed, which we've mentioned, imposed for failure to file, negligence, any of the penalties they have, they will charge you interest on those too. Interest is charged on the penalty from the due date of the return, including extensions. Tax liens. A federal tax lien is the government's legal claim against your property when you neglect or fail to pay a debt. Okay, they put a tax lien on it. They got to go to court, get a tax lien on it. The lien protects the government's interest in all your property, including real estate property, personal property, and financial. This tax lien is not where they actually take possession of the property and sell it. This is where they put a tax lien on it. And the lien, if you go to sell your property, that lien has to be satisfied before you can sell your property. They can also go against personal property and your financial assets. Tax levy. An IRS levy permits a legal seizure of the property to satisfy their debt. Okay, in other words, IRS goes to court, they get a levy, they can take your home and sell your home. It can garnish wages, take money from your bank or other financial accounts, seize and sell your vehicles, real estate, and other personal property. I think I mentioned this earlier in the course. Let me repeat it. Back when I first got started back in the 80s, there was, I didn't deal with the guy personally. I was just told the story at the CPA firm that where I was working, and there was a guy wouldn't pay his taxes, and I don't think it was a whole heck of a lot of money, but they would send him notices, and not only would he not pay them, but he was nasty to them. Things like you don't know from a hole in the ground, things like that. He would write to them. Nasty. And so he had a $300,000 house. This was, 35 years ago, probably, I don't know, $750,000 house, now $800,000 house. The IRS went, they got a levy, they took possession of the house, they sold the house. I think the total taxes, penalties, and interest, $20,000 if I recall, okay, $20,000. And then he had to go to court, and he argued that, look, selling a $300,000 house for $20,000 is unreasonable, and the court agreed with him. But I'll bet you his legal fees were more than that $20,000 he owed. Plus, he still had to owe the $20,000 in taxes. So you don't want to let sleeping dogs lie type of stuff. If you are ever in a situation where the IRS, you get a notice, you do not want to be nasty to them. Okay, if you are humble, polite, if you made a mistake, you can get good chance you can get them abated. I just recently had a case where a mistake was made, and so we paid the tax, we paid the interest, and then I requested the penalties get abated. And believe me, I was very civil with them, and my entire argument was correct. It's just that the deduction that was taken was not allowed. Okay, and if you follow the form, it was, and so I requested abatement of the penalty, and I got it abated. Okay, but if you get nasty with them, if you're hostile with them, good chance you're going to have a much tougher time getting that penalty abated. Okay, now there is relief. There is reasonable cause. What is reasonable cause? Reasonable cause changes all the time, and it's going to change from office to office. There's nothing clearly saying exactly what reasonable cause is. A couple years ago, what I traditionally do is I always mail out. We file our extensions electronically, but I always put some in the mail. And I send it certified mail, so I have a certified mail receipt, just in case there's one or two that get missed. Because when you're doing, hundreds of these things, thousands of these things, inevitably you're going to miss stuff. So I always do that, and I say, look, here's my certified mail receipt. We mailed you the extensions. You guys have millions of these things coming in. You probably lost it. In the past, we have always filed our extensions timely, and here's a record of it. And and they wouldn't abate it for that. Okay, they abated it because of the first time that we filed late, but they didn't take that as reasonable cause, and I just let it go. I probably could have fought them on it, but I decided not to. And that's the second one, first time penalty abatement. Generally, if you make a mistake first time, you can get it abated. Look, I made a mistake. I paid your taxes as soon as I found out about the mistake. I paid it. I paid your interest. Check my back returns. Never a problem. Good chance I'll abate it, but I can't guarantee it. You can call and request. Some feel a phone call is more effective, but believe me, you can expect to wait on hold for an hour or more. And like that early notice, the notice I showed you earlier, it's not like the IRS doesn't make mistakes, and it's not like they don't send out hostile notices. In fact, under Obama, and not taking political sides, I'm just telling you the facts, okay? I think the issue was he did not want to be seen as the president who raised taxes, okay? So what they were doing is sending out notices that they were not legally allowed to send out, threatening notices. And I called the IRS up on it one time, on the one notice I did receive, and I was like, because you get a 30-day notice, a 90-day notice. This came before the 90-day notice. Okay, we got a 30-day notice. Then we got this one probably the next month. And I called him. I said, wait, no, you can't send this notice out. You can't do this. And he goes, I know, but it's the policy now, because I think what they were trying to do is scare taxpayers into paying that, figuring out, where am I going to get that money? I owe the IRS. How am I going to get this money? Let me just pay it. Taxpayers are afraid of the IRS. Not all of them, but some are, and so they want to pay it. They just didn't want the hassle. And so I think the thinking there was that if we scare some people who do owe taxes, or we think they owe taxes, into paying it, we don't have to raise taxes. We can bring in a lot of money. If you listen to the financial news, you'll hear especially around tax time, how much money is out there, how much uncollected taxes are out there. You have, and one of the things that high tax rates do is they encourage cheating. Back in the 80s, we've talked about the Tax Reform Act of 1986. I think the highest tax rate at that time was 50%, and they dropped it to, I believe, 28%. Okay, if you can save 50 cents on the dollar, you have more incentive to cheat than if it's only 28 cents on the dollar, okay? So one of the ideas behind the Tax Reform Act of 1986 was lower the rates, but tax more things, because then you have less incentive to cheat on it. Okay. Now, if you cannot pay the tax, say you owe a lot of taxes and you can't pay it, there's such a thing called offer and compromise. If you're having a hard time paying the balance owed, you can do offer and compromise, and I handle those, by the way. If you happen to know anybody, I'm going to be getting sending some mail out on it shortly, because what I found is that with COVID, you have businesses closed that owe taxes, have individuals that owe taxes, and you can come up with an offer and compromise. If for whatever reason you just can't pay the taxes, or an individual cannot pay the taxes, you may be able to negotiate that down. Now, don't believe these ads that you hear on the radio where I owed $100,000 and I settled for $5,000. I settled for 50 cents. I settled for pennies on the dollar. It's just not true. Okay, it's just not true. I will get out to you the offer and compromise booklet. Okay, when I send this thing out, I'm going to email to you the offer and compromise booklet. But it's important to understand that you can do an offer and compromise. Quite a few years ago, I had I think I've told you about him. He was a VP with AT&T, and he knew he was losing his job. And he got into real estate investing. Everything went down the tubes, and then we had the recession of 2007, 2008, whatever years it was. And so they took all their money out of their 401ks and IRAs to try to keep this going. So they're taxed upon those distributions, premature distributions. So they were taxed upon it, and they didn't have the money to pay the taxes. They lost everything, and they got divorced. They lost their home. They lost everything. And what probably was more tragic than anything is that here they were, probably about 60 years old, and since they took everything out of their 401ks, everything out of their IRAs, they had nothing saved for retirement. It was all gone. It was really a sad story. And so I worked on an offer and compromise for them, and it's not easy. It takes time, and so it got denied. And at that time, they had gotten divorced. The woman, she was with somebody else, and the husband was, off. So I never got to argue the offer and compromise further, but we lost. But then I had another one. It was an older woman, and she got into just some stupid, bad investments. And, it was really, really sad. Her husband passed, and I pretty much got an offer and compromise done for her. Need to make a tax payment with the offer and compromise. However, they came up with the low income exception, which she qualified. I believe it's 10% that you have to pay of taxes owed to do an offer and compromise. But there's a low income exception that this woman qualified, Wilmina, and and I'll tell you, I never heard from the IRS again. We filed the offer and compromise. And I actually talked to the agent. I said, look, she was an older woman, and it was really a sad story. That look, she just had surgery. She has high blood pressure. She has diabetes. She's 80 years old. Uh, you're never going to get this money from her. She doesn't have it. And after we did offer a compromise, I never heard from the IRS again. They never told it was settled or anything at all. But apparently they just let that one go. And I know of other cases. There was one when I was in grad school. There was an immigrant who was a hair cutter, and he had a small building, and he lived, I guess somewhere, however he managed to do it, buy the building, and he lived in the back. He had his little apartment in the back, and it was a cash business. He was an immigrant, and I don't know how he got audited, but the agent who was teaching the class was telling us this story, that he went in, he audited the guy, and the guy wasn't living a lavish lifestyle by any means. He was just a simple guy and probably just never knew. He may not have even spoke English, okay? And so they assessed him all the taxes and all that, but then the agent forgave him. He just forgave all of them. So these guys aren't heartless. And there's a million stories out there of these things. So they're not heartless. They go home. They got a family. Some of them can be nasty. I've dealt with a couple nasty ones, and you don't want to let them push you around. But most of them, by far, most of them are really decent people, and you don't want to, get into an argument with them. You don't want to be nasty to them. The IRS does have prepayment plans, short-term plans, 120 days or less, and they have long-term plans. Generally, they want to get paid within a year. Okay, my experience has been that as long as you keep paying them, they are not going to come after you. Okay. But then that could change too, depending on things. We have, Joe Biden is trying to get his tax plan through. They wanted to monitor bank accounts for $600, transactions $600 or more. I think that's going to go by the wayside. But, they were looking, Joe Biden's thing all along has been to tax the wealthier people because they're not paying their fair share. But here they were going to, look for transactions of $600 or more in your personal bank account. And I think that's probably going to get shot down. Okay, what happens? You can appeal. Okay, if you go through everything and the IRS says no dice, you owe this money, appeal. If you owe less than $2,500, you simply tell the auditor you would like to appeal, and you do an appeal. That's where you may want to engage a CPA or an attorney, because it's very important how you word these things to them, okay? If you owe $2,500, $25,000, you can write a protest letter or use Form 12203. If you owe more than $25,000, you have to write a protest letter. And that's where you want to engage somebody who has experience in this stuff. You can appeal all the way up to the Supreme Court, which we saw with Solomon, okay, right? The home office deduction, which was just a few $1,000s, I believe. He went all the way to the Supreme Court, and he lost. So that is the end of IRS penalties and interest, okay? And part of it is part of why I've added this, I want you to be aware of how serious it can be. But like to scare you, like if you hear this one does that one does this, I have clients tell me, John, my friend never pays taxes. It's just not true. And you see these ads, sitting down with the client for 10 minutes. I found I could save him $40,000 in taxes. Not true. So be careful of that stuff. Stay away from it. Steer clear of it. It's just not worth it. Okay, so that's it. Please, if you have any questions, drop me an email. Drop me an email. Stay in touch going forward when things come up. I'm glad to. I have, some number of former students that I do business with. So please stay in touch with me when things come up. Thank you. Take care.